Thanks for staying with us, everyone. First up, investors who signed up for the Eurobond debt exchange program will receive an extra consent fee and 2 special payments. These are a fresh set of compensations put forward by government to encourage the investors to sign on to the offer. George Raffis starts us off with this report.
Government yesterday finally launched the offer on the London Stock Exchange, seeking to allow Eurobond holders to exchange their old papers for new ones. The Finance Ministry, to the advisors, are proposing 2 options for investors, that is, the DISCO or the PAR option. But in an attempt to ensure that this offer is successful, the ministry is offering $10 per every $1,000 of existing notes that are exchanged. Government is also proposing 2 special payments in cash to the holders that participate in this offer. Joy Business is also learning that the proposals are conditional and it to be dependent on how the whole offer goes. Finance Ministry is hoping to end this exercise on September 30, 2024. This debt restructuring is part of the IMF program conditions, that is to help bring Ghana's total debt stock to sustainable levels at the end of 2028.
Well, join us on Zoom, partner Deloitte Ghana, Yao Latte. Good evening to you, Yao. What's your understanding of the offer we are making to the Eurobond holders? A 1% consent fee, we are told 2 special payments as well. Tell us a bit more about your understanding of this.
Thank you very much, Daryl, and good evening to our listeners and viewers as well. So just to give some background to this. So before government reached an agreement with our Eurobond holders sometime in June, around about end of June, our Eurobond constituted about 45% of our total external debt. So our Eurobond amounted to about 13.1 billion. So after we went through the restructuring process, we were able to successfully restructure about 5.1 billion of the 13.1 billion. And so that was good news, because then what it meant was that our total debt and interest repayment on this facility was going to go down, and we're going to have some fiscal space as a result of that. Now, at the time government reached an agreement with these external debt holders, that's the Eurobond debt holders, government proposed 2 options, and there was a third, but I'll explain that. So the 2 options are, 1, the DISCO option, and then the PAR or the PAR option. So under the DISCO option, the Eurobond holders who opt for that, which has just been launched, that DISCO option is what has been launched in London, is that any of the Eurobond holders who opt for that, they will have a number of conditions to fulfill, or the number of benefits and also costs that comes to them. So the first one, the first benefit is shorter maturity period. So the bonds, those who opt for this program, the DISCO program, are likely or will be paid in a period between 2026 to 2029. That's a shorter period. And then they will be paid at a relatively higher interest of between 5 to 6% coupon on their bonds. But then what it means is that all those who are signing up onto the DISCO option, which had just been launched, they are likely to take a haircut of about 37% on their principal. So if you opt for a shorter maturity period, you take a 37% haircut. But then what government has done, which for me is going to be some form of incentive for those who are going to sign on to this, that they've also given an early sign-up fee of 1%. So all the Eurobond holders who run or who rush to go and sign up onto this before 20th September, that's about 10 clear days before the end of September, they are going to get 1% early sign-on fee, which is an incentive, but we'll wait to see how many of the Eurobond holders would sign up onto this and get an early sign-up fee, or some would still adopt a wait and see to the 30th, and they will lose or forfeit the 1% early sign-up fee.
Well, it appears the bondholders are welcoming of this based on Reuters reporting. What does this signal, and how crucial is this development?
It's a positive thing. I think what the investors have all said in the past is that they want to have clarity in terms of what the way forward is. And then 2, they will be able to estimate their losses going forward. Mind you, a lot of these investors have already priced into their assets. Some of them have written down their investment in government of Ghana bonds. So what they want to do is for them to be able to cut their losses, they want to know what proportion of these investments are going to be written off. And so some, as early as was announced way back, that government is expecting to write off or will expect a debt relief of about 30 to 40%. Some of them would have written off about 40%. So if they have to write off about 37%, then it's just something that they have always expected. But then now they have to make proper provision and also recognize it in their books. The second thing is that for government will also be able to estimate their interest and loan repayment over the next 3 to 4 years. Mind you, remember we had to suspend our repayment of principal and interest sometime in December 2022. Now we cannot continue like that. That suspension has to be lifted. So we have to go back and start repayment. But you can't just start repayment. You have to start repayment based on a certain model or projection. So government can now estimate that out of the about, let's say, 5.1 billion of Eurobond holders, about 3.2 billion of that have signed up onto the DISCO program. Right. And out of that, our cash outflow is going to be a certain amount. So government can project how much it's going to pay in terms of interest and principal over the next few years.
What happens next in terms of timelines?
So I think what's important is for us to wait for what proportion of investors or Eurobond holders will sign up onto this program. There are two other options that I mentioned before. So there is also the PAR option, which has a longer term maturity. For me, if a lot more Eurobond holders sign up onto this, it will be better for the country because you are going to repay that in 2037. So that would give us a lot of relief. But that's the reason why a lot of bondholders have signed on onto this, that they're going to get a lot of cash upfront or within a shorter period, but then it's coming at a cost. But as you know, the time value of money, they rather get a significant portion of their money now than to wait to 2037 when they are not sure of what's going to happen and how government is going to manage their affairs over the next 30 years or so.
Yeah.
There's also a third one, which is supposed to be guaranteed by the World Bank. And we're also waiting for that to also come on stream, because if that's also announced, you see some of the Eurobond holders will still sign up onto that. So there will still be some investors who adopt a wait and see. And so we need to get clarity in terms of all the proposals that our government has on the table. Yeah.
So the Committee of International Bondholders, they've talked about how important it is for Ghana to sustain economic reforms to eventually regain access to the international financial markets. That's in reaction to, the latest that we are reporting now. How important is this?
Yeah, so I think it's important because if we have to go to market and successfully raise bonds, as we used to in years back, we would have to put our house in order, to put it in very simple terms, because you would have to give comfort to the investors that if they are signed onto your bonds, some years down the road, you will not ask them to take a haircut. So we would have to give comfort in terms of how we've managed our affairs in the last few years when we suspended repayment of loans and principals and interest, and also how we project to repay our loans going forward. Because portion of the loan has been restructured, but then we still have to commit to repayment of principal and interest. So how are we going to generate income as a country per our budget statement, per some of the projections that we have from oil, cocoa revenues to repay? Because there are some risk in the numbers, as in our projected revenue. And so if we are not able to address that, we will not give comfort to investors. And we may go to market and be unsuccessful. I remember sometime in 2015, we went to market and we came back with an unsuccessful subscription to our bonds because investors were not comfortable. And those who were ready to give us the bonds were asking for a higher coupon, and that we couldn't afford.
Well, quick thoughts on inflation. First Solutions projecting that inflation will decline to 20.8% by the end of this year. How likely is that based on your analysis?
Yeah, so I think inflation per First Solution and also some of the reading that I've seen from Economic Intelligence Unit, we are likely to experience what we call deflation. So inflation is likely to taper down, as we've seen in the last couple of months.
Even based on the factors that we are seeing right now?
Yes, it's driven by a number of factors, which include the fact that food inflation is also seeing a declining trend. The significant component of our inflation is driven by two factors, I would say. So there's food inflation and imported inflation. So food inflation, the key driver, is now going down because about 42% of Ghanaians' consumer expenses is on food and non-alcoholic drinks.
Right.
So if you see food inflation going down, then you see the trend. But then there are some risk, or this deflation may not see the light of day if you do not address a number of things. So the first one is that this enforcement of ban on exportation of grains will have to be implemented effectively. Otherwise, you would see inflation going up because food inflation will go up. And then the second thing is that we are likely to see some impact in increasing or rising oil price on the international markets. These are pass-through effects. We also increased the price of utilities in July. This is likely to also see a pass-through effect in cost of doing business and also cost of goods and services. If you do not address these two problems, as in managing our exchange rate and also addressing the issue of the ban on exportation of grains, we will probably may not experience the downward trend in inflation the way it's been projected.
All right, Yaolate, happy to speak with you this evening. Thank you so much, partner Deloitte Ghana. Appreciate your time. Enjoy your weekend. Well, some other story we are following for you. The legislative instrument seeking to regulate the prices of cement has been passed into law despite opposition from cement manufacturers and sections of the public. The initial draft of the LI included a provision requiring manufacturers to obtain government approval before setting prices, but this provision has been removed. Now, the minority in Parliament voiced strong opposition to the proposed legislative instrument aimed at regulating cement pricing in the country. The Trade Minister, Katie Hammond, said the LI will lead to a reduction in cement prices across the country. So join us on Zoom with reactionist Pierre Kusiadumako, who's Regional Director of CAS International. Good evening to you. Your reaction to this news?
Thank you very much, and good evening to your viewers. I think in the first place, this LI is not needed. In the market where prices are determined by demand and supply, that is the best indicator of determinant of prices. However, we know that cement industry has been characterized largely by cartels and some underhand dealings. And so for most countries, relevant laws are put in place to check cartels and price fixing conduct of industry players. And the laws that they use is the competition and antitrust laws. These are the better approach in resolving the issues in the cement sector. And so the minister or the ministry is trying to use the wrong tools in addressing the problems in the industry. And so for me, sitting here, I don't believe that this LI can cure the malady in the cement industry. That is number one. And I also think that if the minister is bent on protecting consumers and businesses in Ghana, the best approach that the minister could have used is to pursue the consumer protection law. This consumer protection law has been in with the ministry for the past 19 years. Honorable Katie Hammond came to inherit the draft bill and has not done anything about it. And look at how he was so keen in getting this LI done. So you said you are protecting consumers in getting a better price. I think the minister is getting it wrong. I would say that he should rather pursue the consumer protection law, pursue the Competition and Fair Trade Practices Bill. These two laws are the best antidote to every sector we have in this country, not just the cement sector. So, and number three, even on the legality of the LI is also an issue, because when you look at the provisions in the GSA Act, which mandates the minister to go to Parliament to pass with an LI, the issue of pricing is not included in the work within that subsection, I think section 80 of the GSA Act. And so if people go to Supreme Court, the Supreme Court can easily nullify the whole LI that it is it's not rooted in law, because the work of Ghana Standard Authority does not include price regulations. Standard authorities are there for quality and technical specifications and standards, not pricing. So the law itself is even wrong. And I urge members of the industry to go to Supreme Court to challenge its validity.
Well, we're yet to hear what the cement manufacturers have to say to this. We've been trying to get their response. I'm sure they're trying to put that together. But as it is right now, the law has been passed. You say that it wouldn't do much to tackle the rising prices. Plus, you also mentioned the fact that the Consumer Protection Bill has been on the table of the Trade Minister for years now. I mean, close to 4 years, if you like. A couple of days ago, you held a press conference. You talked about it. Are you getting any responses yet?
We are not getting any response yet, but we are still drumming home that it is still not too late for the Ministry of Trade to take the bill to Cabinet and Parliament. You know, Parliament resumes somewhere within the first week of October, and we have about 4 weeks now, so it's still not too late. And I mean, it appears that the ministry is not interested in protecting consumers, and that's a bit strange, because the ministry is what? Ministry of Trade and Industry. Traders are looking to protect their interests. In Ghana, we have seen a lot of association, Chamber of Petroleum, Chamber of Telecom. All the business are forming chambers to protect their interests. And now the consumer has become helpless and miserable in Ghana because nobody is protecting the welfare of the consumer. You go and buy fuel, and then the fuel is delivered under volume. You go and buy a product. I recently went and bought a television from one shop here in Accra. I brought the television, it wasn't working. I went back, they told me that, but sir, the thing was tested for you once you came. And so if it's not working, then it means you have spoiled it. And every day, millions of Ghanaians go through such an ordeal. And the only malady that can help Ghanaians is what? Making sure that the consumer protection law is passed. But Honorable K.T. Amon and his ministry is not doing what is required of them, and has taken Cement LI, something that can only address cement issues, which is also not even rooted in law.
All right.
So as I said, it is not too late for the minister to take the the Consumer Protection Bill to Parliament. And as we said during our press conference, we are also going to petition His Excellency the President and also pick it at the Ministry of Trade until we see that the Consumer Protection Bill is taken to Parliament.
All right. Apel Kusiad Marco, Regional Director, CATS International, thank you so much for joining us with your reaction to the passage on the LI regulating cement prices. And sorry about your TV set. You're watching the Business Live. Coming up, Cocoa Board says a new cocoa crop season will be open with its proposed self-financing plan. We've got details coming up. Don't go anywhere. All right, you're watching Business Live. We're bringing you some of our headline stories tonight. The Ghana Cocoa Board says a new cocoa crop season will be open with its proposed self-financing plan without the usual syndicated loan facilities. Finance Minister Dr. Mohamed Amin Adam earlier indicated that government will be seeking external funding to support the cocoa sector. But Chief Executive of Cocoa Board, Joseph Boyne Edu, says the board will be combining the new purchasing regime with loan syndications if necessary in anticipation of an effective implementation of the self-financing transition. He was speaking at a stakeholder meeting with cocoa farmers in Kumasi.
I don't think there's anything wrong with, introducing a new thing. But once you have an existing model, you can only combine that model with a new one. And I believe that if it works, then Ghana will go with that model going forward. We've already tried it during the last crop season from June up to the end of August. That was the model that we're using to buy cocoa and then ship. And it has worked. but we want to scale it. So even as we may be going for, loan, because when you talk about syndication, it's like going to borrow. And what we are doing will not require borrowing. So if we are blending not borrowing with borrowing, I don't think it should become any issue. But we want to try, not even try, we want to implement the not borrowing, that the self-financing first. That's what we are starting the season with. And once it works, then there will be no need for us to go for borrowing.
Our final story tonight, the National Petroleum Authority is set to go after more oil marketing companies over debts rounding up to 2 billion cedis. This could lead to license withdrawal and possibly shutting down some of the firms that failed to settle the debts over the past years. Dr. Iverson Opong is Chief Executive of the Association of Oil Marketing Companies.
Our members. We're going to certify our members from next year. So you're going to have a rating, A+, A, based on your performance, based on how diligent you are with paying your taxes and doing the right things within the industry.
To what end?
So,
how does it,
so,
to the bankers, to the GRA?
So, yes.
And what about the consumers?
No. So we're going to list it on our website.
Okay.
We're going to make it very visible. So even if you're going to buy fuel, okay, you can even go to the list and know that once you buy fuel from this particular station, you are guaranteed. And if it fails, you can now come to me and I'll sue that member for you, buy you a new car, for example. Because it happens in the US, it happens in Europe. Why can't it happen here? So the bankers will now go also on our website, and if an OMC, ABC OMC goes to the bank, and said, I want to deal with you. They'll go to my list and say, are you certified? If you're not, then go back. Because the debt is not only with the regulators. They also owe some of the banks.
What is the total rough number in terms of debt, regulators, GRA, and the banks? What are we looking at here?
I don't have all of them. Because I've still not got. Boss have sent their list, MP has sent theirs, GRA is yet to send, the bankers are yet to send. So, but it's huge.
The initial one that you have at your disposal, how much are we looking at here?
It's huge.
How huge?
I mean, it's almost 2 billion.
2 billion Ghana cedis?
Yeah.
This is total in terms of...
just a few ones I have.
The few ones that you have.
If you can give me 1 week, I will just let you have
So this is levies margins owed to the regulator, MPA.
Yep.
Ghana Revenue Authority in taxes?
No, GRA is not part of this list.
This is just to the MPA, right?
Yeah, and BOST.
And BOST. But we understand some of them are also owing GRA
they do.
taxes as well.
Correct.
Has it gotten to
and the banks.
And then the banks. So what about GRA and the banks? Any fair idea about...
No, I don't have it yet.
If they are owing MPA this amount of money, then when you talk about the GRA, and then that could be huge.
No, I mean, if you know the quantum of money that is involved, then you also understand that this is also very little money. Because you see, the oil and gas industry is a cash drunk, what do you call it, sector.
That story and in Business Live. Thanks for watching, everyone. Beyond the Numbers coming up with Winston Taki and Caleb Ziblim. Don't go anywhere.